Hey everybody, welcome to Trading Capital. It is May 6 here on this Friday evening. Jumping into the S&P 500, overall the indexes were very volatile. We've seen some nasty reversal action over the last couple trading sessions. Today we saw continued downside pressure. However, there was a small buy program off of the double bottom lows on the S&P 500. You can see here we're holding this double bottom tweezer area. The question is, will this support zone hold? We're ultimately very close to the bottom of this channel. You do have a major pivot zone here on the S&P 500. However, the key question is there is this technical gap that is also very close to being filled. Now there is a possibility that on Monday that we flush down into this 400 zone, or on the SPX's 4020 zone. However, this double bottom proved to hold, and if we just flip to the intraday basis, there is a chance that this level holds going into Monday. The markets are certainly oversold. Not the indexes specifically, but they are into good support zones, but certain stocks should see some sort of a bounce in the event that yields kind of take a breather and have some neutral to downward consolidation before heading higher. And that's the big thing that's put pressure on the markets, is the yields. I certainly do think eventually on an intraday basis you float up to here to fill this gap. That is potentially another 4% on the markets, which should lift some specific stocks. If you do get through that resistance, your next big resistance, we'll just flip to the daily chart, is going to be this blue line over here. We're certainly going to be piling on the shorts once we get into this resistance, and then if for some miraculous reason we get into the top of this trend line, that'll be your best opportunity to short into a technical resistance zone. The question is though, will this double tweezer bottom hold on Monday? There is a chance that we fill this gap. Eventually we will fill this gap, but if we consolidate over it, then this gap won't be much technical support, and it will flush down very quickly, and I think that takes you to your next level just down here, which will be more of a technical bounce level. But the key question is, make sure that we watch for consolidation above the gap. If it does consolidate above the gap, that means that when it does break lower, this won't be as strong of a support level, despite it being a technical gap fill. So eventually we will come down to fill this gap. The question is it within 1 week, 2 week? Do we have a little bounce upward before heading lower? If we do have this sort of price action where we float up into this resistance and then we come straight down into the gap, that might be more of a solid technical level to play as a bounce trade. But if we consolidate sideways, let me just get my chart here. If we do some sort of a move sideways in this range, then this gap will not be a good level to try to play for a bounce trade. So we have to watch how the pattern unfolds and just be patient and let the charts dictate what we will do as a swing trade option. But nonetheless, oversold. Our bias, we do head up back to this blue trend line. That is your first major area. There is a possibility that we get stuck in a small range. I think yields have had an aggressive move. I think now that we have some clarity for the next month from the Fed, I think we could be trading in this range, ping-ponging around until we break lower. So that's certainly what we've seen intraday. It's been a very tight range. We started selling off, came to the middle point of this channel, bounced back up to resistance, hit resistance, came all the way back down to support, bounced up, consolidated in the center point of our channel, broke higher, hit resistance. Now you've come back down, and the question is, will we come up to the center point of this channel, consolidate and move higher, or will we look to just consolidate on the center point of this channel before breaking lower? Time will tell. Let's jump into the QQQ. QQQ, again, you did make a new low on the chart. So unlike the NASDAQ, let me just get rid of all these things. So unlike the spiders, you actually made a new significant low. You see you can come into these pivots all the way over here. We were basically, I think the Qs can flush a little bit lower, but you are into that support level on a decent amount of volume. So whenever you have an increase in the above average of volume on and you're oversold into a potential support level, it always dictates that the probabilities of a bounce are stronger, because often when you see these larger volume candles compared to the last several weeks, that means that you've often hit a near-term peak fear level. There's been a lot of people that just dump, probably adjusting to the new balance sheet reduction plan, the federal rate hike, inflation numbers, etc., the potential of a contracting GDP. When we look at it on a weekly basis, you can kind of see that we've had 1, 2, 3, 4, 5 days of red in the indexes. That's also the same for the S&P 500, also on increased volume. So the markets are oversold. There is potentially a bounce that's coming along very soon. We do hold some long positions in the market, but I want to congratulate you for taking profits on MasterCard. We banked 8.59% today. We also added to STNE. So here you can see STNE, we're down 91% from the highs in a little over a year. But I love this retrace. So this initial breakout volume on earnings was a massive beat on earnings in terms of revenue. This was your gap up higher. Your one day, I think it popped like 20 to 30% on earnings. Look at this standout volume low. And now we've retraced over the coming weeks right into this technical gap fill. We filled this gap and we hit this double bottom perfectly. The beautiful thing is that this original bottom held. So with all the selling pressure, now the selling could not be over. There could be potentially more downside. But with all the selling, we managed to hold the double bottom. And it usually suggests when you have an increased volume bar like this on the lows of the chart, this typically would be a standout low on the chart. This amount of volume typically holds and favors a bounce. And the other macro technical pattern that we're witnessing is we're consolidating in this downward sloping wedge formation. And downward sloping wedge often, if you look at 1,000 of these charts, downward sloping wedges often break out to the upside. So there's potentially a huge bounce that occur. We simply have re-entered this trade. Basically, we know that this gap up on news was a huge beat on revenue, earnings, and now we're into the trade at an even lower level than the people that all piled into this trade were in. So all the momentum chasers, all the people that liked this earnings report have now piled on. We're in an even cheaper rate, and the fact that you're 91% down from the highs, even simply if we just stay in this wedge formation all the way until mid-June, we basically have a 20 to 30% trading range that we could bounce in. And where do I think we ultimately go? There's a gap fill in the chart here that I think has a strong probability of being filled. That's 90% higher from where basically we are buying. And even if you rally 90%, the stock would still be down 83% from the highs. That just shows you the power of waiting for the lows on the chart. It certainly could go lower, but again, you have this massive level of support coming in there, and you have this trend line of support coming in there. So I do think alongside with this outstanding outlier volume event, we do have pretty much a standout low on the near term. If we look at Netflix, we added to Netflix today at 178. It proved to be a decent add so far. One of the reasons I like Netflix is obviously it's down 75% from its highs now. I still don't think it should be down that much. I still think people haven't really fully digested what their last earnings were, in the sense that the forecast of losing subscribers has not come to fruition yet, and I do think that Netflix can easily correct that by putting some sort of a new technology around limiting households who are using free accounts. And just by simply capturing 2% of the 100 million households that use it, that offsets the forecast that they're expected to lose. If they capture 10%, well, then you're 5xing the original downgraded forecast. But jumping into the technicals here, Netflix has been trading in this downward sloping parallel trend line. You had this original breakout of this downward sloping trend line, which was looking to be bullish until the markets completely reversed. You sold off, but look what you retraced to. You retraced to this downward sloping trend line, and you've bounced off of it. So even though you finished negative on the day, in the short-term basis, this is some bull flag consolidation that is looking to break higher. You've now had the breakout with the retest of this down sloping channel, and it looks promising for Netflix to break out. It's certainly oversold. I certainly think it's very, very easy for Netflix to come trade back to this 260 level once the markets catch a bid. 260 is basically a 42% rise. We could see that over like 2 to 3 week window. One sort of news event of a fund acquiring Netflix would shoot the stock up 20 to 30%. No doubt about that. If we look at what happened in the last earnings report, that's certainly what happened, was when you had this downward sloping consolidation, and then basically it started catching a bid under it, and then you had the announcement of the Bill Ackman hedge fund buying into Netflix, I think it was over $1.1 billion stake, and it just led this huge buying pressure. Well, now this stock is way cheaper, so hedge funds must be salivating at some point. At some point this does become a buy level, and I certainly think it's in that range to be a great candidate to profit from. So we'll just have to be patient with Netflix and keep accumulating at the key technical levels. But overall, as the markets are expected to bounce, I may pull some more shorts off the table, but I'm comfortable with holding some as a downside hedge. But I do think the markets are due for some sort of a near-term bounce. Take care, everybody. Hopefully you enjoy your weekend, and we will stay tuned for more trading alerts and action as the markets are continuing to evolve and digest